In this video, I'm going to be talking about taxes and some of the things that you can still do while we're in 2020 and how you can plan for 2021. So it is true that we are at the tail end of 2020. Now, while most of the year is gone and you might think that there isn't anything that you can do for 2020, I want to share with you that there are still a couple things that you can do that will benefit you for tax year 2020. And then I want to also talk about some of the things that you can be doing for 2021. In this video, I'm going to share 5 things that you can do to finish off 2020 strong and to plan for 2021. It's important that you do not wait until tax time to talk to your accountant. And the reason for that is that you can have a plan in place prior to the beginning of the year where you're going to be taking advantages of tax benefits that's going to impact you not only for 2021, but also going forward longer term. You always want to take a longer term view on your financial situation and not just plan from year to year, or worse, just go to your tax accountant, hand them off your tax document, and that's it. That's not the most efficient use of your money. And there are many things that you can do to save on taxes. If you're new to my channel, I am Tanya Taylor. I am the founder and CEO of Grow Your Wealth TV. My mission is to help at least 1 million people grow their wealth. Therefore, my channel covers personal finance topics such as budgeting, repairing your credit, managing your debt, and investing so that you can retire worry-free. I also love to talk taxes, so I cover topics such as taxes as well, like I'm doing right now. Please subscribe to my channel, like this video, share it with your friends, hit the notification bell so that whenever I post new content, you will be alerted. Also, all of that help the algorithm so that others like you can see my videos. Now, the very first thing that I would say to you is that you want to review your W-4 form. This form can be reviewed at any time during the year, but since we're starting off a new year, now is a great time to just go back and take a look at your deductions. When you're reviewing your W-4 form, you want to review it in conjunction with your pay stub because you would not have gotten your W-2 form as yet. Your W-4 form shows how much deduction you will be taking for the year from your paycheck. And if when you did your taxes this past year, you got a large refund, your salary for last year hasn't changed much, then you're making an interest-free loan to the IRS. So what you can go to do is go to your W-4 form and reduce the deduction that you have on that form so that you're getting more of your money during the course of the year instead of waiting until the following year, sometime until around April, to get that money to use because it is your money. Conversely, if you find yourself always owing taxes at the end of the year, you want to do the opposite, especially if you struggle to come up with the payments by the tax deadline. So consider increasing the amount that is deducted from your paycheck on an annual basis. Now, the reason why I recommend that you do this in conjunction with your accountant is that they can do some simple calculation, especially if your income has changed, and they will give you very good guidance in terms of what you want to include on that W-4 form in order for you to be getting all of your money in your pocket during the year instead of waiting until year end, so that you can know how much you really need to pay so that at the end of the year, you're not paying additional taxes. The second thing that I want to talk about is to contribute to your IRA. The amount that you can contribute for 2020 is $6,000 or $7,000 if you're over age 50. And that is for your IRA. And then you would be able to deduct that amount when you do your taxes. That's going to reduce how much you will have to pay in taxes. There are income thresholds. Another reason why you want to speak to your accountant because you want to make sure that your income is not too high so that you can get that benefit. If your income is too high, you can still contribute, but you will not get the tax benefit. That's the difference. You can also contribute to a HSA, and a HSA is a health saving plans account. For 2020, the maximum amount that you're allowed to contribute is $3,550 if you're single and $7,100 if you're contributing to a family account. The contributions can be made up to April 15th of the following year. The HSA is a tax-exempt savings account, and it allows eligible taxpayers to contribute pre-tax dollars to an account earmarked for medical expenses that are not covered by insurance. This election can only be made if you have a high deductible savings plan. Between the IRA and the HSA, you can deduct almost $10,000 from your income to reduce how much you will be paying in taxes at the end of the year. And then that's also a great way to save for retirement. The third thing that you want to do if you're an investor is to harvest and rebalance your portfolio. What does that mean? If you had investments that you sold during the course of the year, or if you have any kind of capital gains that are taxable, then you can offset that against any losses that you had from sale of your investments up to $3,000. This one is kind of tricky when I talk about offsetting it against a loss, because while this is a benefit, right? If you had all these capital gains and if you have certain stocks in your portfolio that are at a loss position, you can sell it and you can get that benefit. But if these stocks are great potential investment that are just having a bad year, then you may not want to sell them just so that you can take advantage of that tax benefit, because in the long run, you may be missing out on a stock that has really great potential. So that's where you're going to have to balance out whether or not you want to apply this strategy. But if this is a stock that's been sitting in your account for however long and you think it's more of a dead weight stock and you just don't want to hold it in your portfolio anymore, then you definitely can sell it and take advantage of this tax loss harvesting. And of course, at year end, it's also a good time to really just revisit your portfolio. When you came up with a strategy for your portfolio, you want to go back and look at that strategy and see if what you have in your portfolio is matching up to the strategy. And if it's not, you may need to plan for 2021 on how you want to rebalance that portfolio. Do you take advantage of tax loss harvesting strategies? Comment below and let me know. Also, comment below and let me know if there are anything that you're doing for the year end in order to get some kind of tax benefits. If you're finding these videos really helpful, don't forget to hit the subscribe button and the notification bell so that you can be notified of new content. Let's move to number 4. Number 4 has to do with required minimum distribution. This would only apply to you if you are retired and you are 72. The IRS changed the requirements for retirement savings plan like your IRA or your 401k, where when you are age 72, it is mandatory that you start withdrawing from your tax deferred retirement account. However, as a result of COVID, this was paused, which means that if you're 72 during the current year, you do not have to take the required minimum distribution. Now, that's a big positive for retirees who don't necessarily want to withdraw from their tax deferred account. One of the strategies that can be employed is that since you don't have that tax liability this year, you may want to use this as an opportunity to convert this tax deferred account to a Roth IRA. Because when you have a Roth IRA, there is no required minimum distribution, and therefore you'll be able to leave your money there and have it grow for a longer period of time. It is also a time when you can take advantage of an opportunity to sell some of your investments that have appreciated in your taxable account, because now you have less income that's being taxed, and therefore you can pay the capital gain tax on some of these assets that are in your brokerage account. The last thing that I want to talk about is planning to give. Under current tax rule, you can deduct charitable contribution only if you itemize your deduction. So there is standard deduction, which is a number given to you by the IRS for each of the categories, whether it's single, married, head of household, or married filing separately. This is a number that most people default to, But for other individuals who may have a lot more expenses, for example, someone who may have a mortgage, large charitable contribution, and other items that they can deduct, they would take what's called an itemized deduction. The itemized deduction is greater than the standard deduction. Under the CARES Act, you are allowed to deduct up to $300, even if you have a standard deduction. So, as a way of reducing your income in the current year, if you donate to your favorite charity $300, you will be able to decrease how much you will be paying for taxes. Now, it's not that much that you will be benefiting, but it's also a way to do a good deed as well. And sometimes people want to give, but they don't feel like they're getting any benefits, or maybe they don't give. But this will be an incentive to give someone who is in a less fortunate situation through your different favorite charitable organization. Those are the 5 tips that I have for you for 2020 and going into 2021 in terms of what you can do. Now, other quick reminders. Remember to include all income in your tax document. When you go to your tax accountant, remember that if you collected unemployment, that you will need to pay taxes on that. A lot of people miss that. And if you did not have taxes deducted when you receive the unemployment, your tax liability is going to be more. Your tax accountant will be able to help you. Note, however, that if you received a stimulus check, that's not considered income and is not taxable. And if you did not receive a stimulus check, you should also discuss that with your accountant to determine one, if you qualify, and two, if you qualify, you may be able to claim that recovery rebate credit on your tax return for 2021. So, really important that you're communicating with your tax accountant and sharing all these information with him or her to make sure that your taxes is done right, because you do not want to go a couple of years and find out that you missed something and then there is some kind of penalty associated with it. I cannot tell you how many times when I used to prepare taxes for people that they would come back to me and they'll say, I got a letter from the IRS. And when we look at the letter, it was like, oh, you missed providing your unemployment income because you didn't communicate that you had unemployment or whatever the reason was. It's really critical to plan with your tax accountant all of these different things and to really share what you're doing and how you're doing it so that they can know how best to prepare your taxes to ensure that you don't end up in any of these situations. So, here are the key takeaways. There's no better time than year end to start doing your financial checkup. You should take advantage of tax planning that will benefit you in 2020, but also set the stage for 2021. Your goal should ultimately be to legally reduce your taxes as much as you can. If you do not have someone that does your taxes on a regular basis, I highly, highly encourage you to find that person, because if you keep moving from one place to the next, that's where things get lost in the shuffle. You always want to make sure that you are consistent and that you keep records of all of your tax information. I do hope that you found this useful and that you will put some of these things in place for 2020 and for 2021. Also, just so that you're aware, I do teach individuals how to grow their wealth, and I do this by meeting them exactly where they are on their journey. So if you're someone who has had, let's say, bad credit, or you have debt that you need to have managed, or just to manage your personal finances holistically so that you can invest and protect what you've worked so hard for, please feel free to reach out to me. All of my links are in the description box below. And you can hop over and join me in my Facebook community as well to continue all the learnings that you are getting on this channel.